Assalamualaikum warahmatullahi wabarakatuh. Good morning. Hello, my name is Cantika Bakti Pertiwi and I am 19 years old. Originally, I came from Kendal, but then I moved to Semarang because continue my study in university. Now I am studying at Sultan Agung Islamic University, or popularly known as Unisula, and I am taking accounting. As a student of accounting, I study a lot of subjects as statistics, accounting information system, intermediate financial accounting, basic accounting lab, and of course English. And because Unisula is an Islamic university, of course I also study a lot of things about Islam. In this opportunity, I would like to present to you 10 terms of accounting which I believe you must know. Number 1 is lease. Lease is financing activities in the form of providing capital goods either on a lease basis with an option right or leasing without an option right for use by the lessee for a certain period based on periodic payment. In a leasing agreement, there are three parts who will be involved, namely lessor or leasing company, lessee or customer, and supplier. Lessor are leasing companies that finance the desires of their customer to obtain capital goods. A lessee is a company or individual that obtains capital goods with financing from the lessee company. Supplier is the provider of the goods and also includes the provider of insurance service use. Number 2 is cost of goods sold or COGS. COGS is cost incurred by a company to produce a product or service that starts from the manufacturing process until the product is ready to be distributed to the market. COGS consists of several costs. As for the cost included in the calculation or COGS component is A. Inventory. If your company is a manufacturing company, inventory consists of raw material inventory, work in process inventory, and finished goods inventory. B. Direct labor. To calculate direct labor costs or expenses, you can see the amount of wages or salaries incurred by the company. C. Overhead costs. Overhead costs are costs that arise apart from inventory costs and direct labor costs. Number 3 is account receivable. Account receivable is one type of accounting transaction that deals with billing consumers who owe a person, a company, or an organization for goods and services that have been provided to the customer. This is usually done by making bills and sending these bills to consumers who will be paid within a deadline called credit or payment terms. Number 4 is accounts payable. Accounts payable is the company's obligations to other parties which must be fulfilled in a short period of time. This obligation arises because the company purchases on merchandise credit for sale to customers. If there is a purchase discount in cash, then the trade debt must be reported in the amount of the trade debt after deducting the cash discount. If the purchase of credit is a VAT or value add tax. Number 5 is current assets. Current assets in accounting are types of assets that can be used in the near terms, usually 1 year. Example of current assets include cash, receivables, short-term investments, inventories, and prepaid expenses. Current assets are short-term assets which can be converted into cash in the short term. Current assets are considered important for the company because they can be used to fund daily business operations and to pay ongoing operating costs. Number 6 is general ledger. General ledger is the code of a collection of accounts or accounts that have been grouped or classified based on benefits, nature, and purpose. Its function is to record all financial transactions to be compiled into a financial report, which is the responsibility of the management on the management. In general ledger, there must always balance. Number 7 is balance sheet. Balance sheet is part of an entity's financial statements that are generated in an accounting period that show the financial position of the entity at the end of that period. The elements in the trial balance include A. Assets are economic resources obtained and controlled by a company as a result of past transactions. B. Liability is an economic sacrifice that must be done by the company in the future in the form of the delivery of assets or the provision of service caused by actions or transactions in the previous period. C. Equity is the owner's right to the assets of the company, which is net assets. Number 8 is cash flow. Cash flow is the movement of cash inflow or cash outflow. Simply put, cash flow is money earned and issued within a certain time period. The money that comes in the form of income can include salaries, bonus, and investment returns, while the money that's come out can include various expenses, such as various household expenses, installments, loans, and taxes. Income greater than expenses will create positive cash flow. Number 9 is Certified Public Accountant. Certified Public Accounting or CPA is a professional development program or accountants organized by the Indonesian Institute of Certified Public Accountants. This certification is intended for those who want to improve their competence and obtain permission to become public accountant. The CPA exam with the new curriculum has 3 levels, namely the basic level, the professional level, and the advanced level. Number 10 is GAAP or Generally Accepted Accounting Principles. GAAP is the standard framework of financial accounting guidelines used in its particular jurisdiction, commonly known as accounting standard or standard accounting practice. GAAP includes standard conventions and rules that are followed by accountants for recording and summarizing and in preparing financial statements. The purpose of GAAP is to ensure that financial statements are transparent and consistency from one organization to another. Okay, that's what my presentation about the term of accounting. Hopefully can be understood and apologies if there are mistakes. Thank you for your attention and goodbye. Wassalamualaikum warahmatullahi wabarakatuh.